Afternoon, colleagues who are joining. We're just going to wait a minute or so. We've got a couple of hundred people registered for this webinar, so just bear with me 1 minute and then we'll get going. Right. Good afternoon, everyone. Welcome to this SIPFA webinar on the accounting for infrastructure assets. We've got a couple of hundred delegates registered, but the numbers seem to have pretty much stabilised at around about the 170 mark. So I'm going to start now, and any other colleagues will join shortly, I'm sure. My name is Conrad Hall. By day, I'm the Director of Resources at the London Borough of Newham. But I also chair the SIPFA Code Board, which, as you know, has had a tremendous interest in this issue. I'm going to do a couple of housekeeping points and then introduce the team who will be hosting the webinar and then hand over for a presentation for around about 15 minutes. And then we will have the majority of the session for the Q&A, which is, I think, colleagues find the most valuable part of this. Just an apology in advance from me. I have a cabinet meeting at 5 o'clock, so I shall be leaving at around about 10 to or something like that, and colleagues will take over the remainder of the session. A couple of very quick housekeeping points. The webinar is being recorded, so I hope no one has any objections to that. Obviously, it's just for the point of view of ensuring we know exactly the issues that were raised, which may become complex. And when we've been through the presentation, you'll see the chat function is disabled, but there is a Q&A function that we will use to make sure that all of the questions are answered. I'll do my level best in sharing it to make sure that everything that gets put in there gets dealt with. To introduce the panel then, first, if I could introduce Sarah Sheen, who will be taking us through the presentation shortly. I'm sure Sarah is very well known to you all. She's a member of SIPFA's policy and technical team for many years, specialising in standard setting and has worked on all of the public sector and public benefit SORPs. She leads on SIPFA's UK Charities SORP and is a senior advisor to the SIPFA Code Board. And she's also leading SIPFA's response in terms of things like the Redmond Review and local audit, and is responsible for reviewing and preparing a lot of SIPFA's research on technical papers, particularly on capital finance. Prior to working for SIPFA, Sarah was a national lead for PwC, and then was also seconded to the Welsh Government, where she was responsible for taking forward the local authorities' capital finance and accounting regulations and statutory guidance. And had previously worked for a number of roles for a major local authority in Wales. Ian Murray, I'm not quite sure if Ian's just on the call yet, but he will be shortly if he's not. Very newly appointed as SIPFA's Director of Public Financial Management and has over 20 years experience of working with the sector. He joined District Audit as a graduate trainee in 2002, so that's one thing we have in common. Not quite the same year though, and moved his way up to become a manager at the Audit Commission, then joined Grant Thornton in 2012, where he progressed up to becoming a key audit partner. So he's always very much by choice worked with and within the public sector, and has worked right across that with local government, NHS, police, bodies of varying size and complexity in the audit and in advisory capacities, and very well versed in the issues of public finance and public service. As CIPFA's newly appointed Director of Public Financial Management, Ian leads the teams in key areas of policy, technical and standard setting. And then Stephen Kane, who's a member of CIPFA's policy and technical team and is the secretary to the CIPFA Asset Code Board. For many years, Stephen has also been terrific help developing CIPFA's view and response to proposals for new standards being consulted on by other standard setters in the UK and internationally. For example, dealing with IFRS and the IPSAs, as well as auditing standards and guidance, and indeed Practice Note 10. Prior to working for CIPFA, Stephen joined the National Audit Office as a graduate trainee, working on a range of central government audits, mainly specialising in the audit of large computer systems, and also spent 3 years at HM Treasury as an accountancy advisor. So you've got a tremendously experienced team to help you with the subject matter of this, which I know has been hugely contentious and no little technicalities. You certainly don't need to hear any more from me on that, so I'm going to hand straight over to Sarah now. We'll take about 15 minutes running us through a presentation on where we've got to, focusing on the short-term solution, but also with an eye to the longer term, and then we'll move into the Q&A if that's all right. I can see one question in the Q&A already, which we'll deal with in due course. Perhaps more. Oh, I should have said, sorry, apologies, one last thing. If you are having any connection problems or anything like that, if you email Monica Lewandowska, you'll have her email on the invite from CIPFA. She'll be able to support you during the webinar for that. Sarah, over to you.
Thank you, Conrad. That's just a further illustration of who's on the panel today, and thank you, Conrad, for that introduction. It's very useful. As Conrad said, we're going to be looking at this quite quickly in terms of the presentation, because it's to allow you the time to ask us questions. And so I'm going to go very briefly through the brief background. Most of the focus will be on the temporary solution. Again, the longer term solution, I'll spend just a brief time on, and spend some time, little time though, on next steps. And because there will be a lot for us to do, all of us as local authority stakeholders in this area. So looking at the brief background, I think we'd all recollect that there's, so I won't go into this in too much detail, that there have been issues with historical asset recording information. There's issues around how assets were taken on the balance sheet, and yes, for the historians amongst us, it goes as far back as 1994, when transport infrastructure assets, or highways assets, and all infrastructure assets, in fact, were taken onto the balance sheet at capital amounts and discharged. So not historical cost, but it was deemed to be historical cost from there on in. This and other information deficits meant that there were no or infrequent derecognition for most local authorities. And some of this problem was whether there were actually any balances to be able to be derecognized. And some of the decisions taken around historical asset recording was because there are questions around the usefulness of this information. As I'm sure everybody's aware, the rest of the balance sheet or most other property, plant and equipment is measured at current value, because you can do something else with these assets. But with infrastructure assets, the only way you're going to get use out of them is to use them up. You can't sell them. Once they're on the ground, that's it. There may be scrap value, but very little else. So moving on to the temporary solution, we've looked at this in detail for some time now, over the since March, but we consulted on this in May last year, 2022. And there were other elements in the consultation, but the two principal elements to resolve the temporary issues were around the removal of the disclosure of gross cost and accumulated depreciation because of the information deficits, and that they don't represent what they purport to represent, and the introduction of an assumption which, through various iterations, moved into a potential practical expedient, that the replacement expenditure would be the amount that is derecognised, that on replacement expenditure, the amount that is derecognised is on average across the network, and on average is important, and across the whole network is a nil amount for the net book values. So that's the carrying amounts in the balance sheet. So those are the two principal elements that we were aware of from the information we had from local authority stakeholders, auditors, and other parts of the framework that we thought would be required to resolve this situation. And I would apologise, but I think it's probably important that we do look at this slide here, because it is important that we focus on why we could have, for example, resolved the issue earlier, but because it was such an important issue and contentious issue, it took us a while to get to the full end solution from an accounting perspective. There was support in the consultation for both of the suggestions, although there was more of emphasis from the 80 plus respondents that there would be more positive affirmation of the second part of the solution. And SIPVLASIC agreed to both those elements. Other parts of the consultation process and SIPVLASIC's due process, there was more of a problem with, and for very good reasons. What all parts of the SIPVLASIC due process is focused on is high quality financial information. So there was agreement throughout the due process on, although I won't say it was without contention, but there was agreement on the temporary relief on the disclosure, subject to there being a recovery plan. But there was concern over using a practical expedient without having evidence to do that, without having the information to be able to do that in terms of the historical information. In essence, that standards already allow you to use estimation processes, and so therefore estimation should still be able to achieve this. But I think we worked out that the historical deficits are such that it is very difficult to get back to that position, and these deficits have been accumulating over a long period of time. I think the answer to this is that we couldn't do it in the end. An accounting solution we could have proceeded with it and possibly, but it would have taken a lot longer. And we were also getting to the position that the evidence we had and feedback was such that a pure accounting solution probably wasn't going to remove all the risks of qualification, which is the issues that we were concerned about. And so therefore we drew a line under looking for the second part of that, the solution, i.e. the practical expedient about the amount to be derecognised. And therefore the code changes were limited to the update to the code and specifications for future codes, which is available on the SIPVL website. So when you get the slides, the link in the slides, if you haven't seen it already, which I'm sure everybody has, but if you haven't managed to link to it, that is available on the link that's on this page. If you don't get to it, it's on the SIPVLASIC pages of the SIPVL website, or can be accessed from the dedicated web page that we have on the SIPVL website to look at that. So the disclosures have the temporary relief for the disclosure of gross cost and accumulated depreciation. And so that is there. So local authorities aren't required from 21-22 or previous years where the accounting the audit opinion has not yet been signed. There is an allowance for an authority not to report on gross cost and cumulative depreciation for infrastructure assets. There's an additional disclosure required for the rationale behind that decision, i.e. why as an authority chose not to do that, and there is minimum wording in the code update to use that. There's also a requirement in the update to the code for future specifications for memorandum information to be maintained for information that's not disclosed, because probably any future solution will require as its starting point gross historical cost and net carrying value. So anything will require that as its starting point. So you need to maintain that. And if possible, as the bulletin recommends, to try and maintain that and do derecognition for both the net carrying amount and the gross carrying amounts. Although memorandum information is required to be maintained. The other thing that might be useful to local authorities, but is probably useful for an evidence base for everybody, is what the code has a summary of what previous codes, going all the way back to when it was a SORP, and as much as we can gather from up until 1994 about the accounting policies which were adopted for infrastructure assets, and that's in an annex. So this is a summary of the second principal element to the solution, i.e. the derecognition provisions, because we didn't proceed with it in the code. So that's statute prescriptions in Great Britain, so England, Wales and Scotland. The Scottish government issued it quite early on, and one of the reasons I mention that is because there's differences between the two, because things evolved during that period. It's been a very moving feast in terms of getting to the right position, so that there are differences, slight differences between the two. For the next couple of financial years, the effect of all three should be very similar, but this slide sets out the links to all the elements of the statutory prescriptions. And so you can link to that if you need to through this slide. So we issued a bulletin for the temporary solution. This bulletin, the bulletin covers an outline of solutions to give background to and perhaps a rounder understanding of the issues that need to be faced. Sets out what's in the update to the code and specifications for future codes and what it's intended to do, and sets out the points at which that interacts and how both interact with statutory prescriptions across Great Britain, which I dealt with in the previous slide. There are also mechanisms to deal with depreciation. There was not included very explicitly in the code other than the current code's prescriptions for depreciation, and there are illustrations to help local authorities with how they might deal with any depreciation calculations for infrastructure assets. As a part of that, there's guidance on useful lives, including, very unusually, reasonable ranges for those useful lives, and guidance on why an authority might be outside of those ranges. To assist local authorities, there are accounting policy examples. I would note these need to be also read alongside the accounting policies in the code guidance notes, but these are very explicitly for the bits that need to be dealt with by the statutory prescription and the update to the code. We also have a format for the disclosures, and the bulletin is available on the SIPFA website by the means of the link on this slide. So the statutory provisions, what do they do? In England and Wales, they allow a local authority in England, when it replaces part of an infrastructure assets, to determine that the amount to be derecognised is nil. The regulations indicate that local authorities may instead follow the code. Very importantly, they specify that an authority is not required to make any prior period adjustment for infrastructure assets. Our bulletin is very clear that we want to be very careful of that, particularly if they're just mechanical adjustments that need to be made. And local authorities, we think, because this is such a fundamental issue, that local authorities need to consider the use of the statutory overrides, and particularly the prior period adjustments, very carefully. Very quickly, for our Scottish audience, it's a slightly different approach to that in England and Wales. There are two statutory overrides. First statutory override deals with the disclosure that's in the code update, and the second statutory override leads to the derecognition. Notes for either, they can instead apply the code, but that would not apply to the update of the code. Statutory overrides, one applies for accounting periods commencing 1st of April 2021 until 2024, and statutory override 2 applies from the move to the IFRS-based coding as of the 1st of April 2010 to 2024. And the annex to the bulletin assists with accounting policies and disclosure. So very quickly then, I won't go through this in too much detail, but the bits on depreciation in the bulletin help apply the definition of depreciation for local authorities. It uses weighted averages. You know, just looking at carriageway and saying that it depreciated over 25 years is in itself a weighted average. So the weighted average is important. The methodologies are illustrations about how they might be calculated. They cannot be prescriptive. There are examples in the annex, and the examples include the use of a multiplier. But I would note depreciation is an estimate. It cannot be a precise measurement. And the bulletin has various alternatives, but local authorities themselves may have alternatives to the bulletin provided that they provide a reasonable estimate of the benefits and service potential consumed. We do, as I mentioned earlier, have useful lives to reflect help reflect the pattern of consumption. Normally, we would never do this. It is for an authority to decide based on an expert's views. And SIPRA has taken the unusual step of including reasonable ranges based on information from the UK Roads Leadership Group. However, that doesn't move away from an authority's own decision to make its own estimates itself, to make sure that these estimates are reliable for themselves. The bulletin cannot take away that decision, but it provides useful information to back up an authority's own current estimates, for example. And there are factors to explain why an authority might be outside of these ranges. For example, they may have different weather patterns, they may have more road usage, etc., etc. To move on very quickly, I'll let you read the three options, but option one, i.e. to maintain the temporary position, is not supported by key elements of the process, either SIPFA, SIPA-LASAC, or FRAB. There are two others: a deemed cost approach, which would be a valuation approach, but a one-off basis, like as is in IFRS 1, in a model like IFRS 1, or removed a depreciated replacement cost. And that, we realise, is not without its problems, but we will need to discuss that and have regular liaison with yourselves about that in more course. But that is probably the best technical solution, although we are very, very much aware of the costs of that solution to local authorities, and we'll be looking for practical ways of applying that depreciated replacement cost solution. That's tentative decision so far. There is a new task and finish group which will look through that decision and to evaluate the current decision that's been made. And SIPA-LASAC will have to make that decision as well. I won't go through the timetable. I will let you read that at leisure, but suffice to say, it is a very short timetable. And I won't go through this in too much depth, because what we want is for you to ask us questions. But once my first big box there is a very positive green box. I'm very hopeful that we will resolve the current issues through the temporary solution. We will still have to do and require lots of information to make up for the information deficit. So there will need to be, so whatever information benefits you get from the temporary solution, that will need to be a good starting point for improving that information deficits and making up for the lack of information that local authorities have, including, for example, inventories of various items. So I'm more than happy now to move on to questions. And that, as I said, that's probably, as Conrad said, it's the most important part of our debate today.
Sarah, thank you very much for that comprehensive presentation. And just to emphasise the point that you finished on there, and I did wonder about doing this at the start, but I think it's better here, really. Everyone recognises that the current situation is clearly hugely problematic for the sector. Everyone is well aware of the delays to audit opinions, and there will have been a tremendous amount of debate on the various causes for that and so on. So it is of course imperative that we find a solution that enables us to get through that problem, which will hopefully free up some space to deal with some of the other issues that I know the newly appointed Director of Public Audit has identified as key priorities within the audit and reporting space. But to emphasise, for the avoidance of doubt, this is and can only be a temporary solution. So the need to arrive at reasonable valuations and disclosures in the future is not going away. I can see some questions are starting to come in. Can I just deal with all right. This one's from Anonymous. I don't quite know why some come up that way and some under names, but it doesn't really matter. Just a very practical point. Will the recording be made available for colleagues who are unable to attend, or is it only for SIPFA's internal use? Sarah or Stephen, could you just deal with that one quickly, please?
My understanding is, and Monica will correct me, or correct us in the chat box, that it should be available for others. It's the secondary point as well.
Fine. Okay, and the slides will also be shared.
Yeah.
And then I'm just going to be doing them in order as it stands, but I'll try and pick out themes as they come out. So this is also, I really don't know why they come up this way, but this one is also from Anonymous. For councils who feel that the statutory override is not applicable, would there still be a requirement to make any additional disclosures, and what should these be, please? Sarah or Stephen?
If councils consider that they don't need to use the statutory override, then, and it depends on what they've done with the disclosures in terms of the gross cost and cumulative depreciation, then they know they'll be following the code and no additional information is required.
Okay, I hope that answers that point. Clearly, if the questioner wants to follow up on that, they can. Then Matthew Weller asked two questions. I think I'll take them one at a time. So the first, does the SIPFA bulletin cover all infrastructure assets, or is it just the highways? So for example, their authority has a material amount of sea defences classified in infrastructure, which are currently accounted for in the same way as highways. So
yeah, the bulletin only I'll take it a step back. The update to the code and the statutory instruments cover all infrastructure assets. The bulletin principally focuses on highways network type infrastructure assets. One of the reasons for this is because, yes, that your authority has sea defences, but we don't know whether those sea defences are typical of other sea defences. So what we're doing is keeping a watching brief on it. It is likely that the principles in most of the principles in the bulletin, clearly may or may not be a networked asset, are likely to be applicable, but I think what we're looking for is steady queries before we know whether the bulletin is absolutely applicable to all infrastructure assets.
So just for the avoidance of doubt on that, Sarah, the statutory provisions apply to all infrastructure assets, yes?
As does the update to the code, yes.
Yes, but the guidance note is only for the highways asset, that being the one that we know most about in terms of all the work that has been done, because that is the one that is common to most authorities.
Yeah.
So the smaller class of authorities that have material sea defences or other issues or other similar assets, we'll continue to gather the information on that, and if it becomes appropriate, consider publishing further guidance on that.
Yes.
But we understand that the solution will get us to the current on pass at least. Matthew has another question. This one is quite detailed, and I'm not sure the extent to which you'll be able to answer it, but I'm just going to ask it, and then we'll see. So Matthew asks, our auditors want us to use the replacement programs as an indication of the useful economic lives, but we don't hold records of the age of the assets at the time of replacement, and therefore how long they have been in use. Is this a consistent approach across all audit firms? I suspect that may be a tricky one for you to answer, Sarah, but he follows it up. If so, then we think a lot of accounts will still be qualified based on this issue, despite the bulletin being issued. Are you able to comment on that question, Sarah?
I don't know what auditors are asking. I haven't yet talked to auditors about it, although we do have an audit expert on this panel. In fact, we have two. So they might be able to add more. It might be one indication. It's not an absolute evidence base for the depreciation schedules. It is useful information to back that up. I don't know whether Ian or Stephen might have commentaries on that.
Well, I'll tell you what, let's go on to John Kavanagh's question, which I suppose one could describe as a $64 million question. Okay. And then that might lead us back to Matthew's point. So for all the local authorities that have prior year audits outstanding, due only to the infrastructure assets issue, can we now expect auditors to sign off accounts without further testing?
I would say not without further testing. There will be testing processes that will take place. We are hoping that the bulletin the statutory instruments and the changes to the code provide enough of an arsenal for the audits to be completed. We still are awaiting feedback on that from our various audit sources, and you know, if any auditor on the call, as well as Ian and Stephen, have comments, then you know, I'd like to see those comments as soon as we can.
And I can see that Ian, sure, and I can see that Ian wants to add to that answer. Ian.
So a classic auditor's answer, but it will depend, won't it? So it will depend on how much work's already been done in that area. There's obviously work that practitioners, you know, are going to need to do to take the bulletin and the code and the statutory instrument and update accounts. So there's going to be some changes to accounts as a result of this, and auditors will need to get comfortable with those. So I think we can, but I think having spoken to a few auditors, I think we can expect this provides a route through to audit opinions being signed where infrastructure assets is the only outstanding issue. And I think just to probably reiterate slightly what Sarah said in terms of the question before about useful economic lives, but firms will they'll have their own approaches to this, and that's absolutely appropriate. It's not for us to mandate an approach for each of them. They've got their own risks to manage, and they'll all take their own approach. But I think that the principles that are in the bulletin, and in particular some of the information we've shared around indicative useful lives, which I think is probably us being as pragmatic as we possibly could be around this issue, should provide, as Sarah said, should provide both practitioners and auditors with some information that they need to start moving these discussions forward. And in the example that Matthew's got, where you don't have the records, well, you now have a reference point that would allow you to hopefully go back and revisit those useful economic lives across those sort of classes of infrastructure. I think the only other thing I would say is where those can't be applied, it's about looking for expertise within the council or outside the council to provide you with those economic lives. My view is probably we're now in a conversation around in-year depreciation and the reasonableness of the in-year depreciation charge. And that's probably, and auditors on the call can correct me, but that's probably where the focus will be for auditors as they start to close this issue down.
Well, okay, I'm going to move on to a couple of other questions. It would be really good, though, to the extent possible, given that this was the statutory instrument, I forget exactly when it was laid, but it became law, I think even on Christmas Day. So things have moved on, in at least 2 sort of working weeks since then. So if anyone wants to put any questions or comments in the chat about what's happened since then at their authority and their audit, whether from the audit side or the local authority side, that would be really helpful. Well, I'll just leave you to think on that one. I'm going to move on to the next question. This one again comes up from anonymous attendee who asks, has SIPFA given a model layout on the disclosure notes? It seems that infrastructure assets could either, 1, be included in the PPE note, but omit the gross book value and accumulated depreciation balances, or 2, to use a separate table. It would be helpful to have some guidance so that we don't get too much challenge on the layout of notes. Do hope that we're not spending huge amounts of audit time on exactly how to present information, but let's see, maybe that's indicative of what's going on. Sarah, any comments on that one? Yes, please.
Those are the 2 options that we do have in the bulletin. If it is easier to see them, then they can be separately presented. Infrastructure assets, there needs to be reconciliation to the property, plant and equipment figure, so that it adds up to the line in the balance sheet. That's one option, which might be clearer, but it might be easier if your own note and its format facilitates it to just shade out the bits that would be there for infrastructure assets for gross cost and accumulated depreciation. So it may be a simpler option to do it. So we put both those options in, and both of them are equally valid, and I can't see that there should be a challenge over that. But I'm happy to have
very clear statement. SIPFA believes that either of those options are reasonable.
Yeah.
Okay. Another anonymous attendee, although I think I could possibly guess that they've been working in the sector for some time. So I remember the trials of trying to implement the HAMP, infrastructure measured at depreciated replacement cost, and the impossibility of trying to get our auditors to agree to a methodology where even a slight change in percentage estimates would lead to a material difference. I don't see how it will be any easier now.
That is something that we will be looking at, and we'll be looking at that certainly that is one of the problems that will need to be addressed, that although it might be that that's simply the fact of the matter, and maybe we need to include sensitivity analysis, but certainly it was a criticism of the old model, and if we're not careful it will come through to the current model, that slight changes in measurement could have a significant change in the valuation. I don't know that that's necessarily wrong, but that was certainly one of the issues that were identified. We will keep that one under review as we're developing the longer term solution. And Stephen,
I'll bring Stephen in a moment, but just can I just check on that one? I mean, what SIPF's position on this is then is that this is a means of providing reasonable estimates, and that, you know, as night follows day, really, the nature of reasonable estimates is that, you know, two different people could each make slightly different reasonable estimates as to what they might be, and that where the value is very large, therefore necessarily there can be significant differences between them. But the key point is that, you know, each of them can be a reasonable estimate. And Stephen, I think perhaps you might want to comment on that audit point.
In fact, Sarah answered it with the final sentence, which is that this is an issue that we're acutely conscious of. It was raised during the original discussion of the highways network asset, and in designing a solution, one of our key considerations will be making it as robust as possible while still actually functioning as useful accounting information.
And Sarah wants to add to that.
The thing that might assist us in this, and just it was, for example, if there was a change in the measurement of the width of the road by a slight amount, it would change the valuation, as an example of the thing that the delegate mentioned. And we might be assisted by this in the availability of Practice Note 10, which now allows more of a proportionate approach to materiality for property, plant and equipment. There are examples in Practice Note 10 that will allow us to do that. I haven't had a chance to look at the final Practice Note 10 in detail, but there is now there are examples in Practice Note 10 which allow different levels of, and Stephen will correct me on this, or let Stephen or Ian, 2 different levels of materiality for asset heavy entities. And so that might help us. We didn't have that when we were looking at this in 2015.
Okay. I want to move on to another question now, and this, as things stand, is actually our last question. So do feel free to ask more if you would like to. So this is also anonymous attendee. We are an English authority. Our auditors have issued an audit opinion for 2021, so well done them, but not the audit certificate. So will the prior year disclosure need to be changed, as the statutory override applies to those statements of accounts that have not been certified? Ian, I think you want to pick that one up or have a go at it anyway. It probably depends very much on the exact wording of the SI, doesn't it?
So if I think I've got that, so you've got an audit opinion, you haven't got a certificate, there won't be, the auditor won't, so you won't need to go back and make changes to your 2021 accounts and have those re-audited, if that's the question. There may well be something in the certificate that reflects words to the effect of, you know, had we issued an opinion, something has changed since the time that we issued the opinion, and this would have been the impact. The NAO are pulling together template wording as a starting point for auditors around these issues at the moment. But I don't think, unless there was it would result in a material impact, auditors, I don't think auditors will be going back and asking you to reissue opinions. And then the other thing is that it's kind of the guidance, we put it in the guidance, but it's in this that there's no need to consider prior period adjustments for this. So there's no requirement for you to go back and do prior period adjustments, and that's set out in the on the statute book now. So whilst in the guidance we sort of say, I think we reflect that, and we say that you might want to apply some sensible accounting principles around that. There's no requirement for you to do a prior period adjustment.
Okay.
Very clear. Sorry.
I then have an anonymous attendee says, what's the predicted timescale for practice note 10? Does anyone on the call know that? Stephen.
Practice note 10 has been issued. So and it in any case is explanatory. It's setting out how existing standards can be used, but in a helpful way. It'll take a while for it to percolate into the firms, although I know that the NAO was keen to make sure that that teams were aware of it as soon as possible. So we'll just have to see how practice develops. I would stress that the option in practice note 10 won't always make so much of a difference. It really depends upon the circumstances of the authority and other aspects around the audits. This is reiterating Ian's answer earlier. It depends. So this will be helpful in some cases, we think.
Sarah.
Just to note that for that person, it's available. I haven't reviewed it. It's available on the Public Audit Forum website. So to put in Public Audit Forum, you can link to it from there.
So it's out there is the answer to the question. Yeah. Okay. And then anonymous attendee asks, or states rather, the bulletin sets out possible ways to calculate depreciation, but I felt a bit confused on reading that. Will we only need to calculate depreciation for future statements of accounts, brackets and the memorandum account, if we choose to use a statutory override for 21-22?
I don't want to overuse the phrase, it depends. It depends on where you are in your accounts. If, for example, you have used the statutory override, but you still think that your depreciation in a set of accounts without an opinion and without a certificate, then you still may need to use the options for reflecting depreciation. I'm not saying that you should. It might be that the bulletin supports your current methodologies and provides backing documentation. So I'm not saying that this should happen, but it all depends on where you are on the time of the year. So it might be that you might have to re-estimate for those years that are open. That is a discussion with your auditor, and certainly means that that information, if it helps you provide a better estimate of the consumption of economic benefits, that you could use the methodologies in the bulletin. That being said, I will repeat that the bulletin is very clear that there may be other reasonable approaches. These are some approaches. Yeah. There may be other reasonable approaches that you may use, or simply that the bulletin may support your current approaches. So it depends. There is a spectrum depending on how far you've got to reflecting the consumption of economic benefits and service potential of infrastructure assets.
I do want to emphasise that point. I mean, SIPFA can't sort of state what individual authorities' depreciation policies should be, but what we have done through the bulletin, I hope, is set out sort of clear examples of the sorts of things that are likely to be reasonable. That doesn't preclude other approaches being reasonable on your own circumstances, but it just provides hopefully a sort of typical framework. Here we go, anonymous attendee at 444. Quite a long question. We are currently utilising the statutory override for 21-22. However, if we are able to demonstrate code compliant records for highways assets for 22-23, and if we can demonstrate compliance back to 2010 for the auditors, will that mean that we can revert to including the infrastructure assets back in the PPE table and include the prior year adjustments necessary to show the appropriate fair value of gross book value and accumulated depreciation in the 22-23 accounts. It's quite a long question. You might want to read it again, Sarah and Stephen, before answering and making sure that you've completely got the gist of it.
I think I can't access it very easily. Oh, hang on. I can
Do you want me
do.
to read it out again?
Yes, please.
So currently using the statutory override for 21-22. If we were able to demonstrate code compliant records for 22-23, and if we could demonstrate compliance back to 2010, so those are the conditions, would that therefore mean that we can revert to including the infrastructure assets back in the PPE table and include the prior year adjustments necessary to show the appropriate fair value of gross book value and accumulated depreciation in 22-23 accounts? Ian wants to have a go at that first.
Okay. Good.
So I think the first thing, could you apply the statutory override in 21-22 and then not apply the statutory override in 22-23? I think the answer to that question is yes. You could make the decision to do it this year and then not do it for next year. That's because it's discretionary. So yes, you could do that. The point about compliance back to 2010, I suppose there's a cost benefit question for you there in terms of whether that's worth doing now or whether you would wait to see what the longer term solution might be. And then I suppose just a question around fair value, what we mean by fair value, because we don't have fair value. That's the whole point of the code. It's what started the problem in some respects is these aren't held at fair value at the moment. The code would say these are held at historic cost. So if it's about re-establishing what you think appropriate historic cost is, then again, you'd have a choice because you're not required to do the prior period adjustment because the statutory instrument means that you don't have to. So the statutory override says you don't have to do a prior period adjustment. But if you wanted to, that would be at your discretion. So you could do a PPA if you felt that was the right thing to do. What I would say is the encouraging thing about this question is it would suggest that you are planning to do some work. And I would encourage everybody to start having a look at what they have in terms of information and what's available, because the longer term solution is probably going to require us to have this sort of information from practitioners to allow us to get to a viable and pragmatic solution in the long run. I don't know whether Sarah and Stephen want to help me out, but I think that answers the question.
So Sarah and Stephen have both got your hands up. I don't mind which order we take you in, but it may be that Ian's already picked up the points you wanted to make.
I think, even that Stephen's got is a thingy button on. I think I don't have any arguments with anything that Ian says. I guess if you didn't do the prior period adjustments, then I think you'd need to consider whether, because you'd used it in 21-22, whether or not you would need to go all the way back. I think the reasonableness of that period sounds okay, but you'd need to talk that through with your auditors. As Ian said, that it isn't measured on fair value, it's measured at historical cost, and it's a deemed historical cost at that. But you know, as far back as I think it is reasonable to go is 2010, which was the earlier estimation basis. There would be a lot of work in trying to go that far back to try and rectify it. But like Ian, I would very much support the need for improving things as much as possible if you can during that period, and getting your information bases right, improving your information on useful lives, making sure that you've got a full inventory are really key, and those are always useful whatever you do.
Stephen, anything to add to that?
That covers most of it, but there is an issue as to what kind of historical information deficits each authority has.
Yeah.
And if they've got significant deficits in connection with pre-2010 purchases and balances, that does make it put them in a very difficult position in terms of making the starting point code compliant. So that's something to consider very seriously. And some of the, especially when assets have been passed from one authority to another, the information deficits are quite significant.
Okay, I'm going to do one more question. I may not have time to stay for the answer as I have cabinet in 10 minutes. But this is from Chris Bull. Hi, Chris. If an authority chooses to use this opportunity to reassess the useful economic lives of their infrastructure assets to improve accuracy or bring it in line with the suggestions in the bulletin, is there any expectation that this should be applied retrospectively? My reading is that the direction not to require a prior period adjustment suggests the new useful economic lives could be applied prospectively. Is that interpretation right, Sarah?
The statutory instruments, this is always a personal thing in terms of personal interpretations. The statutory instruments are quite clear that you do not have to go back and make any prior period adjustments. And so, yes, worst case scenario, taking things forward would be a minimum requirement, and reflecting better useful economic lives is a very good thing to be doing. If you could correct without too much work and do implements, that would be better, but I can understand why that might be difficult. If they're so bad that they would be, if they are so different that the previous information you had would be deemed to be in error.
Yep, I'm going to take my leave at this point. I know Stephen wants to come in, but cabinet.
Just to note that Stephen will chair when you leave. Thank you.
Just to thank everyone for attending from me, and also, colleagues attending. Please do thank you, colleagues at SIPFA on this. A lot of work has gone into this, and I know a lot of work has gone into across the sector on local authorities and auditors as well. And I very much hope that we have found a way through the short-term temporary problems, the longer-term issue about proper recording of our assets and depreciation and so on. It is still there. But thanks for your attendance. Thanks to all the colleagues at SIPFA. I'm going to leave now. Stephen, if you would take over chairing for me, that would be much appreciated. Thank you.
Right, I'll take over chairing, and I'll also add a little bit. Thanks, Conrad. I'll add a little bit to Sarah's answer, which is just to say that this is something which will be considered or will be relevant in consideration of the long-term solution, and individual authorities will, and their auditors can think about this when we actually see what the long-term solution is. We have some ideas, and we showed them on the slides, but we actually tried to fix this in a way akin to the long-term solution last year, and it has proved not easy. So we don't know exactly where we're going, but that sort of thing will affect people's perspective on this. Are there any more questions?
Is there one more there, Stephen? It looks like there's a new one in there.
I can only see that that's the one that I'm seeing is up. Right, there's a new one. That's not so much a question as a statement, and it's phrased a bit negatively, but I think there's certainly an element of truth in it, which illustrates how difficult it is to work with historical cost if you've got any gaps in your information recording. So that's more in the nature of a problem rather than a question, and it's one of the problems that we are very conscious of and working on. We probably wouldn't phrase it that way, but hopefully a bit more positive. If there are any more questions, then we'd be very happy to answer them. We've had a very good run of questions, but I think we seem, and please do jump in with a question if you have an issue that hasn't been covered. It's been very helpful to us to see the views of attendees, and we be very grateful for further feedback on how the bulletin is useful. Thanks to everybody for coming along, and thanks to our presenter, Sarah Sheen, and to our chair, Conrad, who's just departed. And thanks also to Ian. Shall we all take our leave and grab another 5 minutes of the working day or non-working day?
I mean, just to if there are any queries, particularly around, you mentioned the infrastructure assets that are not highways infrastructure assets. If you would like, you can put them through if you're a SIPFA member on the Technical Inquiry Service, or we have the policy.technical. I don't know, Stephen, could you put this in the chat for me? Oh, we can't put it in the chat. Monica will email it out with the slides. The other place, if you're not a SIPFA member but you have a query about infrastructure assets, because I would like to say I would like to thank the current Task and Finish group, or the previous one, current Task and Finish group, for all their work. We've augmented the membership. We haven't needed to change the membership, but we've augmented the membership to look at the longer term solution. But the new Task and Finish group will be monitoring the current situation for the solution, to see how the solution is working. So any feedback on that will be really useful. And we're also then looking at the longer term solution. So any members of the Task and Finish group that are on the call, we're very much grateful to that. And for the new members that are joining the Task and Finish group, we are also very grateful to that. And we, like I said, Monica will send out with the slides the policy and technical email address. But otherwise, of course, if you are a SIPFA member, you have the Technical Inquiry Service that you are able to put a query on through. We will monitor both those things as a part of monitoring the temporary solution. But if you have any suggestions for the longer term solution, we would also welcome that as well. Thank you. I don't know, Ian, have you got any final comments before we go?
No, not at all. I mean, I think we really do want the feedback. So we can't, this is a temporary fix. We need to get to a longer term fix, and the best way for us to do that is for you guys to, we need the feedback from you as practitioners to help us do that in a way that's going to work for as best as it can for everyone. So, and I think just to say thank you to Sarah and Stephen for the work that went into the bulletin, and I hope people find it helpful. I think it's a really good piece of work. So yeah, and thank you everybody for attending this afternoon.
Thanks all. Thanks very much.